Imagine you're hitting send on an invoice to, a major client.
Right.
But before that invoice even reaches their inbox, some government algorithm just intercepts it.
Yeah, it catches it midair, basically.
Exactly.
Yep.
And the system finds this tiny, microscopic math error in how a discount was calculated. So it instantly rejects the sale, and it automatically freezes your incoming cargo at customs until you fix it.
It sounds totally crazy.
It sounds like a dystopian sci-fi novel. But this is not fiction. This is a live, highly enforced regulatory framework that is currently rolling out all across the globe.
It really is. It's a phenomenal structural shift in just how global commerce operates.
Yeah.
Because the traditional rhythm of business accounting, where you make the sales, you do the work, and then maybe weeks or months later, your accounting team gathers up the data to report on what happened that is effectively being bulldozed.
Just totally ripped up.
Exactly. And the source material we're looking at today for this deep dive, it captures this perfectly. It's an insider essay called "The Future of Tax Compliance is Real-Time" by the team at RTC.
Right, real-time compliance.
Yeah, RTC. And they have this great analogy. They say that running tax compliance the old way is like driving a car while looking only at the rearview mirror.
Oh, I like that.
Right, because you're steering your current operations based entirely on historical data, things that already happened weeks ago.
And what the RTC team is telling us is that the government, they don't want to look in your rearview mirror anymore.
No, not at all.
They want to be sitting right there in the passenger seat, like watching the road with you in absolute real time.
Yeah, they're demanding the passenger seat.
So our mission for you today is to unpack this massive, totally silent revolution. Because tax is morphing from this, boring back office accounting chore into a really high stakes, real-time technology race.
It's becoming an IT problem.
Exactly. But a regulatory shift of this magnitude, one that requires basically overhauling the tech stack of every major corporation, that doesn't just happen on a whim.
Right. Governments aren't doing this just for fun.
No. There has to be a profound financial driver behind it.
And there is. The driver is this multi-billion euro problem that's known as the VAT.
The VAT gap.
Yeah. To understand why authorities are forcing their way into the passenger seat, we have to look at how value-added tax, or VAT, actually functions.
Right, because it's not like the sales tax we have here in the U.S.
Exactly. Unlike a standard U.S.-style sales tax, which is really only collected once at the final point of sale to the consumer.
Right, when you buy a coffee or whatever.
Right. VAT is different. VAT is collected at every single step of the supply chain.
Okay, so let me make sure I got this. If a manufacturer sells parts to a builder, they charge VAT.
Yep.
And then the builder sells the finished product to a retailer, and they also charge VAT. It's like a multi-stage mechanism.
Precisely. It's multi-stage. At each stage, the business collects VAT from their buyer, but they also get to claim a credit for the VAT they paid to their own suppliers.
Oh, okay, so they only give the difference to the government.
Exactly. They only remit the net difference.
Mm-hmm.
And on paper, it's a brilliant system.
Because it creates a paper trail.
Yes. It theoretically creates this self-policing paper trail. But in reality, this multi-stage structure leaves a massive glaring loophole for something called missing trader fraud.
Okay, missing trader fraud. Give us the breakdown of how that actually plays out in the real world.
Sure. So let's say Company A sells goods to Company B.
Okay.
And they charge, let's say, a 20% VAT.
Fair enough.
Company B collects that VAT from their buyer. But before the time comes to actually hand that 20% over to the tax authority, at the end of the quarter or whatever, Company B simply vanishes.
Right, vanishes, like they just disappear.
Completely. They close up shop, the directors disappear, and the tax money is just gone. Meanwhile, the buyer down the chain, they still claim their tax credit because they have a valid invoice.
Oh my gosh, so the government is literally bleeding money out of both ends of the transaction.
Exactly. And that's the VAT gap. It represents the total difference between the tax revenue governments are legally supposed to collect and what they actually end up getting in the bank.
And how big is this gap?
We are talking about hundreds of billions lost annually. Hundreds of billions. And that's to this kind of organized fraud, plus just sheer reporting delays and the shattered economy.
Okay, but I have to push back here a little bit.
Sure.
The traditional response to fraud, throughout history, is to just hire more auditors.
Right.
It's not to mandate that every single business on Earth rewire their entire IT system.
You think so? Yeah.
Right. Our business is really just accepting this massive compliance burden.
Yeah.
Because live streaming your ledgers directly to the government sounds like an absolute logistical nightmare. Not to mention a a massive overreach in terms of corporate privacy.
Oh, businesses are definitely fighting it. But the harsh reality is they are losing.
They're losing the fight.
Yeah, because traditional auditors simply cannot solve the problem anymore. The sheer volume and lightning speed of modern digital commerce, it's just rendered retrospective auditing completely useless.
Because it's too slow.
Way too slow. By the time a human auditor shows up, 6 months later to review a paper trail, the missing trader is long gone.
The bank accounts are empty.
Exactly. The trail has gone completely cold. So governments have realized that if they want that lost revenue, and trust me, they desperately need it, they have to intercept the transaction the literal second it happens.
Wow.
The era of the declaration where you just tell the government what you did last month, that era is dead.
It sounds like moving from, I don't know, a post-mortem autopsy to hooking the economy up to a live heart monitor.
That's a really good way to put it.
But if the goal is to close this multi-billion-euro gap by monitoring the heartbeat of the entire economy, how do you practically do that?
Right. It's a huge technical challenge.
Yeah, because demanding the data is one thing. Actually building a system capable of ingesting, millions of commercial transactions a second without crashing national servers.
Yeah.
That's a completely different beast.
It is. And governments are achieving this through incredibly aggressive technology mandates, specifically e-invoicing and continuous transaction controls.
CTC.
Right, CTC. And according to the RTC essay, Latin America actually pioneered this space years ago.
Oh, really? I would have guessed Europe.
Nope, Latin America, mostly to combat extreme tax evasion. But Europe is now acting as kind of the heavy regulator, formalizing the digital structures, while the Middle East and Asia are adopting these systems at just breakneck speed.
Yeah, the essay points to several distinct national platforms driving this. Like, Italy has a system called SDI, I think.
Yep, SDI. Poland is rolling out KSF.
Right. And Saudi Arabia has mandated ZNTCA. Plus, there's the Spanish SII system and the centralized platform for the UAE Federal Tax Authority, which the RTC team actually notes they've been involved with.
Exactly. It's truly a global rollout.
But when we talk about e-invoicing on these platforms, we really need to clear up a massive misconception here.
Oh, definitely. This is huge.
Because a lot of companies think e-invoicing just means, saving a Word document as a PDF and emailing it to a client.
Yes. And viewing this as a simple format change is the single most dangerous trap a company can fall into right now.
How so?
Because the transition to CTC is not about moving from paper to a screen. It is a fundamental shift from an unstructured document to a highly structured data payload.
Okay, data payload. Break that down for us.
So in a CTC environment, an invoice is no longer a private receipt between a buyer and a seller.
It's not just a piece of paper.
No, it is a string of code, usually in an XML or JSON format. And every single data field, the buyer's ID, the specific tax rate, the timestamp, it's all designed to be instantly read and analyzed by a government algorithm.
Okay, so the government is essentially acting as an algorithmic bouncer at the door of your own business.
I love that. That bouncer analogy is spot on, especially when we look at what are called clearance models.
Clearance models, which is how systems like Italy's SDI or Polar's KSF operate.
Exactly. Under a clearance model, you do not send the invoice to your customer.
Wait, really? You don't send it to the buyer first?
No. You send the data payload to the government server first. The algorithmic bouncer checks the math, verifies all the tax IDs, and ensures the formatting complies perfectly with national law.
And if it passes?
If it passes, the government clears it. They apply a digital cryptographic stamp, and only then is it legally allowed to be sent to your buyer.
Man. So if a single mathematical mismatch causes that bouncer to reject the invoice, where is that faulty data originating in the first place?
That's the million-dollar question.
Right, because it's not a human with a calculator making a typo anymore. It's the underlying software running the business.
Precisely.
Which transforms tax from, an accounting department issue into a massive enterprise-level IT crisis.
And that is the core argument of the RTC source material. Because the invoice is now a regulated data payload, tax compliance is fundamentally an ERP integration problem.
ERP, meaning Enterprise Resource Planning.
Right. These are the massive software environments, think SAP, S/4HANA, Oracle, or Microsoft Dynamics, that basically serve as the central nervous systems for global corporations.
They run everything.
Everything. They handle inventory, supply chain, HR, finance, all of it.
And integrating those central nervous systems with dozens of different government bouncers around the world, That is where things get incredibly messy.
Beyond messy. It's a nightmare.
Because the essay makes it clear that the data has to flow from the original source of the transaction directly to the tax authority with absolutely zero human touch.
Zero human touch, and that means zero room for translation errors.
Right.
The reason ERP integration is such a hurdle isn't just about establishing an internet connection, it is about mapping the logic.
Mapping the logic. Give me an example of what that looks like.
Okay, let's say your global SAP system might be configured to log a bulk discount at the very bottom of an invoice, right? Just subtracting it from the total sum.
Very normal way to do it.
Very normal. But the Polish tax authority's API might have a super strict schema that requires that discount to be proportionally distributed and applied to every single line item individually.
Oh, wow. So if your ERP logic doesn't map perfectly to that specific government schema,
The Polish system kicks it back instantly.
instantly. And that rejection has immediate, actual physical consequences.
Mm.
The source says the wait-and-see strategy is dead because if your API, the digital pipeline connecting your ERP to the government, if it transmits incorrect data or goes offline, your business literally stops operating.
It stops. Full stop.
Which brings us back to the frozen cargo from the intro. We aren't just talking about a late fine from the tax office anymore.
Far from it. If the digital tax documentation generated by your ERP doesn't perfectly match the physical reality of what you're trying to move, those goods physically get stuck at customs.
Just sitting on a dock somewhere.
Exactly. And furthermore, many of these systems are actually integrated with the banking sector now.
Wait, really? The banks are involved?
Yes. If an invoice hasn't been cleared by the government's real-time system, the buyer's bank will literally block the payment.
You're kidding.
No. You cannot pay your suppliers, and your customers cannot pay you. This makes the ERP integration a vital beating organ of the business. If the tax data flow fails, the company's cash flow basically goes on life support.
Which just poses an impossible operational puzzle for global corporations. I mean, think about it. If you are operating in 50 different countries, and every single country is rolling out its own unique system. Spain has its rules, Saudi Arabia has its rules, Italy has its rules. You cannot solve this by installing 50 different local software patches.
You'd go crazy.
Right, you would have 50 isolated IT projects, 50 different maintenance contracts, and 50 different points of failure.
And the authors at RTC, they define this exact scenario as the nightmare of fragmentation.
Fragmentation.
Relying on fragmented local point solutions is an absolute dead end. Because, these national regulations are not static. The technical standards and data requirements are constantly changing.
So it's a moving target.
Exactly. If you hard code a direct connection between your SAP system and the Italian tax authority, and then Italy updates its XML schema 6 months later, your connection breaks.
And your Italian operations just halt.
Just halt.
So how does RTC propose solving a problem where the targets are constantly moving in 50 different directions?
Their vision is to build a centralized, scalable infrastructure. So instead of businesses trying to build individual connections to every single tax office, RTC is building what we can basically think of as a universal translation engine.
Universal translation engine.
Yeah.
So rather than a company hiring 50 different translators, they just plug into one central hub.
Exactly that. A global company connects their core ERP to this central engine just once.
Just one integration.
Right. The ERP speaks its standard language into the engine, and the engine simultaneously translates and formats that data into the specific dialects required by each country.
That is brilliant.
It is. It outputs Italian XML for SDI, Polish logic for KSEF, and Arabic structures for ZTCA. It treats these incredibly complex local tax laws simply as technical parameters within a much larger standardized system.
That changes the entire operational dynamic. Because if Spain alters its reporting format, the corporate IT team doesn't have to panic and write a new software patch.
Yep.
The central engine just updates the parameter for Spain, and the data just keeps flowing seamlessly. It completely removes those lost in translation moments.
It does.
And this highlights a crucial pivot outlined in the source material. This shift affects the entire C-suite, not just the tax department.
Oh, absolutely. This is a board-level issue now.
Let's dig into the practical implications for the modern enterprise, starting with the chief financial officer.
Okay, so for a CFO, the demand for real-time, perfect data is intimidating, sure, but it actually offers a massive strategic advantage regarding risk management and cash flow.
Because they have better visibility.
Exactly. Historically, CFOs lived with month-end surprises. They wouldn't know the full extent of their tax liabilities or trapped receivables until the books closed weeks later.
Right, looking in the rearview mirror.
But if you have a system that is clearing invoices in real time with the government, the CFO suddenly has minute-by-minute visibility into the company's financial health.
That's a game changer.
It is. They can use that perfect, validated data for dynamic cash pooling, instantly moving capital to where it is needed most without waiting for reconciliation.
And for the chief information officers, the CIOs, the pressure is arguably even higher here.
Oh, definitely.
Tax compliance has shifted from being a math problem for accountants to being a mission-critical cybersecurity and system integrity problem.
The CIO is now directly responsible for keeping the company legally allowed to trade. They have to manage the immense cybersecurity risks of opening up direct, two-way API pipelines between the company's internal databases and external government servers.
Which is terrifying from a security standpoint.
Very. If that pipeline is compromised, or if it goes down, the entire supply chain freezes. It fundamentally elevates the IT department into a core driver of business continuity.
The text also touches on the impact for partners. There's a massive opportunity for collaboration here because building these universal translation engines requires a highly specialized intersection of knowledge.
You can't just be a software developer anymore.
Right. You need experts in local legal tax frameworks, architects who understand complex technical written protocols, and specialists who know the deep logic of global ERP systems like SAP.
Yeah.
No single company or consulting firm can navigate all three of those pillars in a vacuum.
No, it demands a completely new ecosystem of partnerships. Tax advisors, software vendors, and IT integrators must merge their expertise to ensure these systems don't just achieve compliance, but actually enhance business operations.
Bringing this all together, the transition outlined by the RTC team is profound. Tax is no longer a historical report you file after the fact. It is a data strategy, it is a cloud journey, and most importantly, it is a daily business continuity decision.
Absolutely.
Governments worldwide have effectively turned themselves into massive data processing tech companies. Businesses really have absolutely no choice but to modernize their own infrastructure to match, or they will quite literally be locked out of the global economy through blocked payments and halted shipments.
But the silver lining, as the source points out, is that digitized tax data is a gold mine.
A gold mine.
Yeah. Companies that view this mandate as a modernization opportunity rather than, a mere compliance chore, they will move much faster than their competitors.
Because they have better data.
Right. Once your transaction data is perfectly standardized and flowing in real time, you can leverage it to optimize your supply chains, manage inventory dynamically, and forecast with unprecedented accuracy. You are turning a regulatory burden into a sharp operational strength.
I love that. But this total digitization of the economy leads to a rather wild, logical conclusion.
Oh, here we go.
Yeah. If governments are successfully forcing businesses to transmit 100% accurate, real-time transaction data with zero human touch, what happens to the concept of the tax return itself?
That is the provocative thought experiment this entire shift points toward.
Right.
If the tax authority already possesses a perfect real-time ledger of every single dollar your business makes and spends, the very second the transaction occurs, the concept of tax season becomes completely obsolete.
It just disappears.
We are rapidly approaching a future where corporate accounting as an act of reporting simply ceases to exist. Instead, the government could just send a daily push notification to your phone with your exact tax bill or refund.
Just a push notification?
Yep, automatically deducting or depositing the funds.
A daily push notification for your corporate taxes. It is simultaneously terrifying from a surveillance perspective, and, I have to admit, incredibly efficient from an operational one.
It really is.
It truly underscores that the future of tax is not just real-time, it is automated. So as you head back to your own work, the central challenge posed by the RTC team remains. The rules of global commerce have fundamentally changed. Is your organization's infrastructure ready for a real-time reality?
Or are you still trying to drive forward while staring in the rearview mirror?
Think about it. Catch you next time.